Welcome to the Week in Review, the show that brings you up to date on the week that was. Here are the top stories. Kingfisher pulls back from the brink but remains in trouble. Government swings open the door for more FII investments. And wholesale inflation remains stubbornly high. We start with Kingfisher Airlines, which experienced a truly tumultuous week. It started Monday down in the dumps. There was news that flight cancellations would continue until the 15th of December, and the airline's severe cash crunch remained. Then on Tuesday, it reported its second quarter net loss had more than doubled to 469 crores. But Kingfisher's chairman Vijay Mallya went into damage control mode. Holding a press conference in Mumbai the same day, he tried to reassure investors. Mallya insisted it wasn't time to write off the airline. He added Kingfisher was not looking for a government bailout and that only loss-making flights had been cancelled. Finally, Mallya defended the airline's full-service model, saying it was more profitable than a no-frill service. The campaign paid off. Shares of Kingfisher soared 2.34% on the BSE on a day the Sensex dropped 1.38%. Of course, Kingfisher is still far from taking off. The carrier is now looking at shutting down some of its smaller stations, and it's not clear if it will get the 800 crore worth of fresh capital it wants. What's more, Kingfisher is still weighed down by a debt of $1.5 billion. Its shares ended Friday at 24 rupees on the BSE. In other news, the Finance Ministry has swung open the door for more foreign investments in the bond market. On Thursday, it increased the upper limits for FII investments in government and corporate bonds. Both limits have been increased by $5 billion. This means FIIs can now put up to $15 billion in government debts and up to $20 billion in corporate bonds. So the overall limit for FII investment in debt is now at $60 billion instead of the earlier $50 billion. The revised limit has no residual maturity obligation, which gives FIIs more flexibility. Higher FII inflows could help stem the conjuring fall in the value of the rupee. And banks with bad loans are getting regulators worried. On Monday, the Reserve Bank said it's concerned about the rise in non-performing assets. It added that money lent to infrastructure, real estate and retail firms was especially likely to cause the trouble. The non-performing assets of Indian banks crossed the 1 trillion rupee mark as of September end. And flying out of Delhi is going to get more expensive. That's because the airport operator will now be able to resume charging the user development fees. Regulator AERA has removed a ban on airport fees. The ban came into effect after a Supreme Court clamped down in April. Back then, the court had said operators could charge only if regulators authorized them to do so. Domestic passengers at Delhi airport will now pay 200 rupees as airport fees, while international passengers will have to pay 1,300. Moving to the economy, India's stubbornly high inflation isn't going down. Indeed, prices have risen more than expected in October. The country's wholesale price index climbed 9.73% during the month. That's virtually unchanged from September's 9.72%. And here are some stories in brief. Petrol has become cheaper again. On Tuesday, the government slashed the price of petrol by 1 rupee and 85 paise per litre. That's exclusive of various state levies and taxes. This is the first cut in the cost of petrol in 33 months. The Finance Ministry's Chief Economic Advisor Kaushik Basu has said the government will find it difficult to meet its 4.6% fiscal deficit target this year. He added that fiscal stimulus packages may have to remain in place for the time being. J. Hari Narayan, the chairman of insurance regulator IRDS, said he was looking at easing the investment rules for Indian insurance companies. Currently, insurance firms have to invest at least 50% in the government securities and 15% in the infrastructure-based debt. And finally, Australia may agree to sell India uranium. Its Prime Minister Julia Gillard has indicated she plans to work towards removing the ban on uranium exports to this country. She has argued the move will be good for Australia's economy and will improve relations with India. And that's all we have for you. Thanks for watching.